So if there is no question, we proceed with cash management. So with the cash management, basically, if you are having a lot of cash sitting in your books, right? Someone may see it and be like, wow, this company is doing well. They are having a lot of cash in their balance sheet. No, having a lot of cash in your balance sheet may mean that you are losing some form of interest, right? You are losing some form of interest. When we go to the balance sheet side, current asset, cash and cash equivalent, we can see a huge form of money. No, that is not. We are not saying you should not have any cash and cash equivalent, because if you don't have any cash in your business, it means you'll be having some liquidity problems, right? You'll be facing some liquidity problems. But we are saying that the cash that you have in your balance sheet should not be too much, because you could have invested that money in securities or in other forms of businesses, right, to earn interest. But because the cash is sitting in your books, you are losing some form of interest. So there is therefore the need to know how the optimum cash to have in our books, right, or the optimum cash in order to be liquid, right, and not to have some form of liquidity problems. So let's begin with reasons for holding cash. What are some of the reasons? Reasons for holding cash. Reasons for holding cash. Some of the reasons. So what do you think are some of the reasons? I think this thing is basic. We've learned it in other courses. Yes. Reasons for holding cash.
Precautionary motive.
Precautionary words, motives or purposes. What else?
Speculative.
Transactional.
Speculative. Motives or purposes. I heard someone saying transaction.
Yeah, transactional motive.
Right. Okay. So that is the cash management. These are the reasons for holding cash, of course. Yeah. So who can explain the precautionary, the speculative? I think those who mentioned can do that, or someone else can do that. So please take them one by one.
So please, I said precautionary motive because and like you are going to the market and then you are holding, maybe you want to buy maybe sugar cane or something, you're just holding 5 cedis. But because you wouldn't know like how much it would be, I just say that, oh, let me take extra like maybe 5 cedis to it. So it's like it's going to save you in case if there's any increase in price or something. Like you are holding that money to offset that fee. I don't know if you get it.
Oh yes, please, I get it. Thank you very much. So basically, for precautionary words purposes, in order to make sure that you meet an unexpected or unforeseen payment, right? As you said, right? So you are just being careful so that you hold this money in case something unexpected happens, then you'll be able to find your way out, right? So that is the precaution. So to take care of unexpected or unforeseen payment, unexpected or unforeseen payment. What of the speculative? Then someone says speculative motive. The one who says speculative, are you there?
It's me. I'm the same person.
Okay.
So, with that, I think like when you're holding too much money, this investment will come in. It's like you are. I'm not free. It's like when you're holding money and then it's too much, you can decide to maybe invest some and then like just keep a little of it. So it's like you do not want to, just as you said that we do not want to incur. Should I say no? We do not want our money to lose its interest or something. So people decide to invest some part of their money and then they'll keep some. That makes it makes sense.
Yeah. So basically, you'll be holding this money to be used for any business opportunity that may arise, right? So any business opportunity that may arise or any investment opportunities, right? So you holding the money so that if opportunities arise, you'll be able to take advantage of these opportunities, right? Okay. Then what are the transactional motives?
Okay, sir. So with the transactional motive, that is holding money for everyday expenses. You'll be buying stuff and you'll be making transactions, taking care of bills and other stuff. So that is the motive for holding money, just to take care of the everyday transactional, expenses.
Right. So, exactly. So that is the transactional motive. All right. So let's look at the objectives of good cash management. Objectives of good cash management. So why do you think we have to manage cash, right? We have to manage cash in the most effective way. What do you think is the objective? What do you think is the objective? So the objective is to hold sufficient. We are managing this cash to hold what sufficient cash to meet liabilities. Meet liabilities. I'm just using one side of the board. Yeah. I mean, the whole of this place will be empty. Wow. Okay, let's proceed because of time. So to meet what liabilities? To meet liabilities. To meet what liabilities as they fall due, right? As they fall due. As they fall due. Right? To meet liabilities. So the objective is to hold sufficient cash to meet liabilities as they fall due. Whilst we are also making sure that whilst making sure that too much cash is not held, right? Too much cash is not what held, right? So this is basically the objective of the good cash management, right? So we're looking at the cash budget, talking about the cash budget. What is a cash budget? So the cash budget will also assist us. So what is a cash budget? It's a detailed plan. Cash budget is a detailed plan, right? Of cash receipts, detailed plan of cash receipts and cash payment. Cash receipts and payments during a planning period. During a planning or period. So it's a detailed plan of cash receipt and cash payment during a plan period. So I'm making a budget. Budget is about your receipt and what's payment. So what are some of the uses of the cash budget? Uses of cash budget. Uses of the cash budget. Some of the uses of the cash budget. So what do you think are some of the uses of the cash budget? Yes, class. What do you think are some of the uses of the cash budget? Hello. Hey, I've given the definition. So what do you think are some of the uses of it?
Planning.
Assisting decision making.
Uses of cash budget, and you don't know. Hey, I've even
Planning.
Making.
To plan cash
For what?
receipts and payment. Planning cash
Yes,
receipts and payment.
drawing cash receipt and payment.
Planning cash receipts and
You said planning cash receipt and payment. Okay. What else?
It helps businesses to meet their short-term liabilities. Oh.
They help businesses
To meet their short-term obligations. Sorry.
to meet their short-term obligations. Are you? What else?
to avoid cash shortage.
To avoid what?
Like cash shortages. So the company doesn't run out of cash.
So to avoid cash.
To avoid cash shortages.
To avoid cash shortage. Is that what you are saying? To avoid cash shortage.
Yes.
Are you? Okay. And the rest. So go and add the rest. Okay. Now let's see if we can look at this cash budget question. Then I don't think we'll finish today. I wanted us to finish working capital management today, but we would also have to come and look at the cash models, the Bama model and Miller all model, and management, right? Okay, so now let's see if we can do something on this question. Can someone read for us the cash budget? Let's solve this one and call it a day.
Actually.
So you are presented with the following forecasted cash flow data for your organization for the period November 20x1 to June 20x2. It has been extracted from the functional flow forecasts that have been already prepared. So then we have the budget preparation. So we have sales for November X1 to be 8,000, December X1 to be 10,000, January X2 to be 11,000, February X2 to be 13,000, March X2 to be 14,000, April X2 to be 15,000. So basically we have those figures there. So then they are telling us that you are told to do the following. Sales are 40% cash, 60% credit. Credit sales are paid 2 months after the month of sale. B. Purchases are purchased the month following purchase. C. 75% of wages are paid in the current month and 25% the following month. Overheads are paid the month after they are incurred. Dividends are paid 3 months after they are declared. And capital expenditure is paid 2 months after it's incurred. The managing director is pleased. So I think there's an opening cash balance of $1,500. So the managing director is pleased with the above figures as they show sales will have increased by more than 100% in the period under review. In order to achieve this, he has arranged a bank overdraft with a ceiling of $5,000 to accommodate the increased inventory levels and the wage bill for overtime worked. A. Prepare a cash flow forecast for the 6-month period, January to June 20x2. B. Comment on your results in the light of the managing director's comments and offer advice. I'm done.
Okay, so this is how the cash budget is presented. So the cash budget, you have a lot of information, but so you have to be careful and make sure you take the information one by one, right? Because one statement or one information can change everything, right? It would actually affect everything. So you just follow what they are telling you. And if you miss something, it means that whatever figures you are going to get, I mean, the final figure will be wrong, but you will still get your picks. So now let's take them one by one. So they are saying that the requirement says that we should prepare a cash flow for the 6-month period, January to June, right? January to June. Now we have, where is January? We have January here, January, February, March, April, May, June, right? But we have given information on November and then December, right? November, December. So here they are saying that, hey, 40% cash. The sales is taking 40% was cash. So we will receive instant cash. When we take the January, this is the January sales, 11,000. We are going to receive 40% instantly, right, in cash. But the remaining 60% is on credit. The remaining 60% is on what? Credit. And I think that credit sales are paid 2 months after the month of sale. 2 months after. The cash budget here, you being able to interpret what they are trying to say. So they said credit sales are paid 2 months after the month of sale. So it means November sales credit, which is 60% of this, will be paid 2 months, which is in what? In January. You get it? Because November sales, which we are saying that 40% was paid in November, the remaining 60% will be paid in January, which is 2 months after the sale. So that is November. We have December, January. So that is 2 months. If they are said 1 month after the sale, it means that will be December. But here they are saying 2 months. So we have December, January. So that 60% of November will be paid here. That is the main reason why they are giving you the November and then the December, right? That's the reason why they are giving you that, because you are just to prepare the budget for the January to June. Okay. And then the being said, purchases are paid the following month after purchase. So what is the purchases? Purchases for January will be paid in what? In February. It means that purchases for December was paid in January, so it will be part of January's what? Computation. Purchases for November was paid in December. We don't need it here. We don't need it in January, February, March, April, May, June. But what we need is that the December's purchases was paid in what? In January. That will affect our January. So we have to do some workings to and then include it, right? Okay. They are saying that 75% of wages are paid in the current month and 25% the following month. So 75% of wages are paid in the current month. Where is the current month? The current month is, if you take January, that's the January. It means the remaining 25% was paid in what? In February. So for December, December's own 75% was paid in December, but the remaining 25% was paid in January. So that 25% will affect our January computation. Okay, overheads are paid a month after they are incurred. Dividends are paid 3 months after they are declared. Capital expenditure paid 2 months after it is incurred. The opening balance is blah, blah, blah. We know that the closing balance of 1 year or 1 month will be the opening for the other, right? The managing director is pleased with above figures as they show sales would increase by more than 100% in the period under review. In order to achieve this, he arranged a bank overdraft with ceiling of 5,000 to accommodate the increased inventory levels and wage bill overtime work. All right, so let's prepare our draft, which is the requirement as stated. So the cash budget, and then go and do our workings too. Okay, so now cash budget. So cash budget for January, February, or from January to June, right? Cash budget for January to June. All right, so now we have our receipt. Receipt. I think I'm supposed to even give the format for the cash budget, but I believe we know the format already. So any cash that is received. Do we know the format already? Hello, should I give the format or we should just solve and then go?
Please give the format.
So please, you can give the format so you can be able to solve future questions.
Okay, so cash receipt. We have the cash sales. So let's say from January, February, and then March. Let's say for 3 months. We have cash sales. Then we have the cash, any cash from credit sales. Any cash from credit sales. That one will also come. Right? If there is any other cash receipt, any other cash receipt would also come here. So basically that is it. So this will give us our total cash receipt. Total cash receipt. This will give us our total cash receipt. Then we come to the cash payment. Cash payments. We have the cash purchases. Cash purchases. Then we have what? We have any payment for credit. Payment for credit purchase. So this one is cash sales. This one is cash purchases. This one is cash from credit sales. Payment for credit purchases. Credit purchases. Then we have rental payment. Any rental payment. Any rental payment separately. We can talk of any wages and salaries. Wages and salaries. Wages and salaries. Can talk of any dividend payment. Any dividend payment. We can talk of and other payments, and any other payments that you would see in the question. So this will give us the total cash payment. So this total cash payment, you deduct it from the total receipt. When you deduct, you are getting your net cash flow. Net cash flow. The net cash flow and the cash balance at the beginning. Cash balance at beginning. At the beginning. Cash balance at beginning. And that will give you what? The cash balance at the end. Cash balance at end. Right. So this is the general format of the cash budget. Then we do our adjustments. Right. So we also prepare the adjustment, that is something like the receivables schedule or payment schedule, any other payment schedule. So that is it. Let's quickly look at our question. So with this question, we have the cash budget for what? For January to June 2002. And 2022. Okay. So now, let's prepare the format down. Receipt. So cash receipt. With the cash receipt, we have sales, right? Looking at this question, we have sales. Let's bring the sales as one figure. So let's do workings 1. We have January. They said January, February, March, April, April, May, June. Right. Okay. So we will come and through this portion. We are preparing our formats. Then we come to payment. So we leave some space in case maybe when in reading the question you see something that you have to bring there, bring it there. Then you go to payment. With the payment, we have purchases. Purchases are paid the month following the purchase. Oh, okay. So this one, there is no need to even do a major adjustment. It means that purchases are paid the month after, right? Purchases are paid the month after. So the purchases, what to be the purchases for January?
Maybe 14,000. Hello?
Yeah, hello. What to be the purchases for January?
I think 14,000.
Why 14,000?
Because you add December's own to January's own, no?
No, they are saying that purchases are paid the month following purchase. So it means that purchases for November, which is 4,000, will be paid in December.
Okay.
And then purchases for December will be paid in what? January.
But I was thinking that since they were saying we should prepare from January X to January, maybe the November one won't count because to be
Yes,
paid in
yes, the November one won't count because of the policy. Purchases are paid the month following purchase. So we only want for January to June. So it means that the purchases for December will be paid in January. What is the purchases for December?
6,000.
6,000, and that will be paid the following month after, which is in January. So January we have how much? 6,000. And we want what of January's one? January's purchases will be paid in when? Will be paid when? January's purchases will be paid when? In February. So what is January's purchases? What is January's purchases?
8,000.
Hello, 8,000. Right, January purchases is 8,000, and that will be paid in February. So February purchases 8,000. What else? Then February's purchases is what? 9,000. That will be paid in when? That will be paid March, 9,000. What of March purchases? March purchases will be paid in what? In April, which is what? 11,000. April's purchases is what? 13,000. That will be paid in May. May's purchases is what? 14,000. That will be paid in June. So the thing is, 𝒂𝒏𝒄𝒄, you read 𝒂𝒏𝒄𝒄 is saying that purchases are paid the following month after, right? So the December purchases will be paid in what? January. So that will be the purchases. Okay. Now, what else? Then we can talk. Look at the payments. You have wages, right? Wages. What did they say about the wages? 75% of wages are paid current month. 25% are paid following month. So we can say workings too. We'll do some workings for them, right? Because the purchases own is straightforward. That is why we are bringing it on the face of the format, right? Now we move on to the next one, which is what? Overheads. Can you see the overheads? Overheads. What did they say about the overheads?
They are paid after they are paid.
They are paid what?
After they are incurred.
After they are what? Incurred. Are paid the month after they are incurred. So the month after they are incurred. So it means that overhead for January, overhead for December will be paid in what? January.
January.
Overhead for December will be paid in what? January. And then overhead for January will be paid in when? Overhead for January will be paid when?
In February.
It will be paid in April, and that is what? That is 1,500. Is it 1,500?
How?
Overhead for December will be paid in January. Overhead for January will be paid in February. Overhead for February will be paid in what? March, which is also 1,500. Right? Overhead for March will be paid when?
April. In April.
In April. Then overhead for April will be paid when?
May.
May. And the amount is it 2,000?
Yes, please.
Then what of overhead for overhead for
May will be paid in June.
May will be paid in June, and that is 2,000.
Yes.
Okay.
So the overhead to have been sorted out. What else? Dividend. What did they say about the dividend?
They are paid 3 months after they are declared.
So 3 months after they are declared. Okay. So it means that November dividend, any dividend or December dividend will be paid for 3 months. So that is
in March.
So January 1, 2, 3 in March. December dividend declared will be paid 3 months. So that's January, February, March. Right? And then the June dividend declared will be paid when? That is not our concern. Right? That is not our concern. So I think they declared a dividend in December and this will be paid in March. Where is March? Where is March?
March is there.
So January, February, March. So March is here, right? Can see March. So the March will be paid in March. What else? With June's own, it will go outside what we are looking for. So we don't consider that. We don't even have the month for that. That would be June, July, August, September. Yeah. What else? Looking at expenditures, capital what? Capital, the next thing is capital expenditure. What did they say about the capital expenditure?
It is paid 2 months after it is incurred.
2 months after it is incurred. So that is also a straightforward thing. Yes. So how do we get that?
So January is 3,000. Will be paid in March.
So January 3,000 will be paid in March. January, February, March 3,000. January will be paid in March.
And then April will be paid in June.
Then April will be paid in June. Okay. So January, February, March, April, May, June. June is the last one. Now, what is the amount for that?
4,000.
4,000. All right. What else? Then we come to is that all? So that is all for the what? For the expenditures. Right. That is all for the expenditures. That is all for the expenditures. So we do our totals. Do our totals, right? Then the totals will be what? Will be totals for cash payment. Totals for the cash payment. So the total for cash payment, we'll put it there. Then we continue from there. Okay. So now let's pause and then go and do the workings and then come back. Once we go and do the workings, we'll come back. Right? So let's go and do our workings. So the workings will be for which one? The sales schedule. Let me leave now space. So it says workings. The workings will have sales schedule or receivable collection period. Receivable collection period. But here we want to show the cash part. So let's say sales schedule. All right. So the sales schedule, we have January. We have January. Right. So let me see December. You can start with. They started with what? November, December. With the when you're doing the workings, I advise you. Sometimes you can say 1 month in arrears, 2 months in arrears. So that one you bring all of them because it may help you. In November, November, December, January, February, March, April, May, June. If there is the need to add July, we'll do that. All right. So now the sales in January, they give us sales in January is 11,000. Then they give us sales in February, 13,000. Give us sales in March, 14,000. Sales in April is 15,000. Sales in May is what? 16,000. Sales in June is 18,000. Okay, so let's now look at the breakdown. So the breakdown will be that we have a cash sales, which is the instant payment. Is that 40%? The cash sales will be what? 40%. 40%. 40% is taken instantly. So what is 40% of 11,000? 40% of 11,000. Please do that.
4,400.
4,000.
4,400.
4,400. 40% of 13,000.
5,200.
5,200. 40% of March.
5,600.
5,600. 40% of April.
6,000.
6,000. 40% of May.
6,400.
6,400. 40% of June.
7,200.
7,200. Then we come to the thing that 50% will be what? Credit sales. 60% will be what? Credit sales. And this 60%, they are saying that credit sales are paid 2 months after the month of sale, right? They are paid 2 months after the month of sale. So it means that November will be what? 8,000. This is what? 10,000. The 60% of November sales will be paid in what? January.
January.
So 60% of November will be how much?
4,800.
Be 4,800. Will be paid in January. So this row. So this is 4,800. 60% of December will be paid in what? February.
6,000.
6,000. 60% of January.
6,600.
6,600. And 60% of April.
February.
No, yeah, February, sorry.
February, yeah. It will be 7,800.
7,800. That's 60% of, is it March? Yeah, March.
8,400.
8,400. And 60% of April.
9,000.
9,000. 60% of me, but we don't need it because we just need up to June, right? So we pause here.
Yes.
Now, so I think that is all for the sales schedule. Very simple. There are other complex questions. So maybe intervention, we would look at that. When it's revision, we look at other questions that are more tricky than this. So what is the sales balance for January? You add this to
9,000. 9,200.
9,200.
And then 11,200.
11,200.
12,200.
12,200.
13,800.
13,800.
14,800.
14,800.
And then 16,200.
16,200. All right, so this would be our what? Our sales figure. So let's go and insert it in our format. Let's go and insert them in our format. The first one, January, what did we get? January 9,200. February 11,200. So January 9,200. February 11,200. What else? March is 12,200. And then
March is
April
12,200.
April 13,800. $12,200. April 13,800.
May is 14,000.
May is 14,000.
14,800. 800.
And then June is what?
And June 16,200.
Okay. So that is it for the sales, right? So if there is any other receipt, you can just bring them here. So I don't think there's other receipts from this question, but maybe in another question you may see other receipts. You bring them there, right? So it's better you bring all the items that will not need any workings because of time's sake, right? Because you are dealing with time. So just bring the item that would not need any adjustment before you go and do your workings, right? So now you're done with this. So if you get here and they say even stop work, you will still get some ticks, right? You get some ticks here. So now let's go and do the workings two. Workings two, what did we say workings two is? Workings two is what? Wages. So wages schedule. So with the wages schedule, what are they saying? What are they saying about wages?
7. Let me see.
75% wages.
75% of the wages are paid in the current month, and then 25% is paid in the following month.
Right. Okay. So now that's the current month. Current month is how many? They are paying what?
The current month, they are paying 75%.
So what is 75% of the January's month?
Of 8,000 will be 600.
So 75%. So 75% of the 8,000
Yes, 6,000. Sorry. Yeah.
Yeah, 6,000. You are doing for January. So
Yes,
January wages is of sales, right? You don't say sales.
Is it of the wages? Oh, sorry. So the January will be 1,200 rather. I was calculating for the purchases.
Yeah,
So it will
so
be 75,600.
75% of 1,600 times
Yes, please.
1,600, that will be
That's
1,200, right? Uh-huh.
yes, please. Yes, please.
And then 75% of February,
2,000 will be 1,500.
2,000 was
Now for
75% of
February will be
2,000,
1,500.
1,500 of 2,400. 75% of
That will be
2,400.
1,800.
1,800. And April,
Yes, please.
75% of April.
April will be 2,100.
2,100. Of May,
2,400.
May 2,400. Of June,
Yes, please. Of June will be 2,700.
2,700. Right? And then the remaining 25% will be paid in the following month. Right? So the following month is what? 25%. So the following month will be what? 25%. Right? So do for the November
Yes,
and let's
please.
see. The 75 on November is what? 750. Is it 750?
Yes.
750. Then the December will be what?
900.
It will be 900. Okay. So the 25%, they are saying that 25% will be paid in the following month after. So it means December will be paid in January, right?
Yes, please.
So what will be the December's 25%?
300.
Please,
December's 25%. Someone said 300.
yes, please.
Because it will be paid in January. Okay. What is January's 25% will be paid in February? January's 25%.
400. 400.
Okay, February's 25% will be paid in March.
February's
February's 25%
will be to be paid in March is 500.
and then March 25%.
To be paid in April is 600.
And then April's 25%.
To be paid in May is 700.
And then May's 25%.
To be paid in June is 800.
Okay, I'm sure that is all. So we do summation for them.
Yes, please. Yes.
Yeah, please give me the totals. Yeah, this is what 1,005. This is what 1,009. This is what
1,000,
2,6. This is what 2,700.
3,
This is what
3,
3.
1, 3, 5,
This is 3,5.
1. Yeah, 3, 5.
All right, so let's go and set them. Let's go and set where is wages? Can you give me the figures?
1,500 for January.
1,500.
1,900 February.
1,950.
2,300 March.
What else?
2,700 April.
2,700 April.
3,100 May. And 3,500 June.
So I think that is all. Let's do that. Total cash payment. So add everything for me.
So January is 8,500.
January is 8,500.
Yes, please. February is 11,400.
February is 11,400.
Yes, please. March is 17,800.
17,000. Is it 800?
Yeah, 800. May is March, April. April is 15,200.
15,200.
May is 18,100.
18,100.
And then June is 19,000. Wait, June is 23,500. Sorry.
23,500.
Yes, please.
23,500. Okay. So this is our total what? Cash what?
Payment.
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 Total cash payment. Let's go back to the question. They're giving us the opening balances, right?
Yes, please.
So they give us the opening balance of 500, and then the we'll be able to determine our closing balance. But let's net it off to see whether there's a net surplus or net deficit. So the total receipt minus the total payment. What do we have? The total receipt minus the total payment.
Okay. For January, we have 700. It's a surplus.
Deficit. Is that the January is what?
700. A surplus.
What of the
February is a deficit of 200.
It's a deficit of 200, and then March.
March, another deficit of 5,600.
Deficit of 5,600.
April, another deficit of 1,400.
Deficit of 1,400. What else?
March, a deficit of 3,300.
March? Is it May or March?
May.
March is it May?
3,300.
Also a deficit, right?
Sorry, a deficit of 3,300.
Okay, and the last one is what?
And then, a deficit of 7,300.
7,300.
300.
Okay. So now let's look at the balance brought forward. The balance brought forward, which is the opening balance. Opening balance. The opening balance, they give us in the question opening balance of how much? The opening cash balance is 1,500. So 1,500 for January. Now, if we add it, what are we getting? The opening plus that will give us a closing balance, a closing cash balance of what?
2,200.
2,200. And we know that the closing balance of 1 month becomes the beginning of the next month, right?
Yes.
Therefore,
Yes,
this closing would be the beginning here, 200. Right? So if you add this, what are you getting?
I'm getting a surplus of 2,000.
A surplus of 2,000. This 2,000 will become the beginning here. If you add the beginning, what are you getting?
A deficit of 3,600.
Deficit of 3,600. This deficit would be the beginning for the next month. So what are we getting?
A deficit of 5,000.
This deficit will be the beginning of this month. So what are you getting?
A deficit of 8,300.
A deficit of 8,300. Okay. It will be the beginning of this.
Next,
So what are
another
you
deficit, 15,600.
15,600. So basically, at the end of the month for June, they are making a deficit of 15,600. So you can see that are they doing well or they are performing poorly?
All.
All right. So I think what is the next question? The B part. The B part was asking another thing. What is the B saying?
Comments on your results in the light of the managing director's comments and offer advice.
And so what is the managing director's comment? What is the managing director's comment? Oh, let you be reading the comments for us.
Oh, okay. The managing director is pleased with the above figures as they show sales will have increased by more than 100% in the period under review. In order to achieve this, he has arranged the bank overdraft with a ceiling of $5,000 to accommodate the increased inventory levels and wage bill for overtime work.
And they are saying that we should comment on the director's director's comment and give an advice. So you are saying the director is saying that he's pleased that the sales will increase by more than 100% in the period. And he has arranged that an overdraft of $5 ceiling to accommodate the increase in inventory levels and wage bill for overtime. So what do you think are some of the advice that we can give to this managing director? Yes, what do you think are some of the advice? So we can say that the what's the name? The manager can give customers, give their customers. So the management should give customers early settlement discount. Early settlement discount to be able to pay within 1 month, right? To be able early settlement discount to pay within 1 month. What else? Which other advice can we give to the manager? Which other can we see advice can we give to the manager? Because the first one is saying to give early settlement discount so that our credit receivables would be what? Would be less, right? Like the example that we saw previously. Because we can see that the credit receivables is also what? Increasing. Can we go to the credit receivable side? Credit receivables. Our credit receivables side. Can we go there? Where is it? Our credit sales, right, is also increasing. So, in order to help reduce our credit sales, we can give out early settlement discounts to the customers so that they'll pay within 1 month, so that they can what? We can get our money in cash. We can get our money in cash. So we can see that the director is planning to go for an overdraft instead. Assuming we were getting our credit sales money, do you think the manager will go for bank overdraft? Hello, do you think the manager will go for bank overdraft if the credit, the receivables, we are able to recover our receivables, get the receivables money? Do you think the manager will go in for additional overdraft? Hey, are you guys here at all? Are you with me or you are on your own?
We are with you.
We are with you, but then the marginal utility is
You are with me, but the marginal or utility is what?
there.
Really, I see. But I'm sure you are getting what I'm saying. If you are with me, then it means you are getting what I'm saying. Just that you are not minding me, right? Okay. So we can also negotiate. The manager can also negotiate with the suppliers. You can negotiate with the suppliers to do what? To increase the credit period. To increase the credit period. That is also a form of finance, right? Payables. To increase our payables. To increase the with the suppliers. To increase the credit period so that we can have the money. Money can be with us for long, right? To increase the credit period to 3 months. So that we can use this money as a source of finance, right? Then we can also tell the manager to defer what capital expenditures, right? Because the capital expenditure, let's go and look at the capital expenditure here. The capital expenditure is something that you can actually defer maybe to another month, to another year, so that because it looks like we are getting a lot of surpluses, a lot of deficits. Look at the result. We are having a net surplus of 700 in the first month. Secondly, 200. It increased to 5,600. It increased to 1,400, 3,300, 7,300. All being what? Loss deficit. Right. So if we defer the capital expenditure, it means that we would at least make some inflow, because that capital expenditure is forming part of our total expenditures, right? So basically, you can give this advice. Anything at all that you can see from the analysis or from the cash budget, you can talk about it. Which anything at all that relates to what the manager is doing, you can just talk about it, and that would be a good answer. So this is what I can say, that they should give out early settlement discount so that they'll be able to get their receivables early than for the manager to go in for bank overdraft. Or they can negotiate with their suppliers to increase the credit period such that they may have enough time to utilize the payables, right, before they pay the suppliers. Or they can also defer the capital expenditures so that the expenses will come down and they will stop making a lot of deficits. Any question? If there is no question, we'll pause here for today. And the next time we'll meet, we'll quickly finish the cash models and proceed with capital budgeting. Proceed with capital budgeting. We proceed with capital budgeting. Any questions? All right, so in the absence of questions, we would pause here for today.